Hello everyone. Good morning, good afternoon, and good evening, depending upon from where you are joining in. So my name is Rakesh Darge. I am fast track recognized solution architect for Dynamics 365 FO, Microsoft certified trainer and group leader and member of India Dynamics 365 Power Community User Group. First of all, thank you very much for joining us today. So we had 45 plus registration as of this morning, and this is the first session in the series of Dynamic 365 Finance Learning. And we always great to have you here, whether you are in India or any part of the world. Today, I'll be joined by Bharat Malviya. Hey, hi, Bharat.
Rakesh, how are you?
I'm fine, Bharat. How about you?
I'm good, thank you.
Okay. Before we begin the session, bit of housekeeping to deep dive more on the finance and accounting aspects. Please do and try and ask questions through Q&A chat. Also, we have a space at the end for Q&A. Maybe we'll try to see, we will get through all the contents, hopefully, because finance and or accounting is a, very vast topic, but we'll try to cover as much as we can. As part of this Dynamics 365 Finance Learning series, the objective and the formats, 4-day weekend sessions, 1 hour each week, and the accounting and the concepts or the terminology of accounting in Dynamics 365. That is the principles of accounting or some sort of finance administration. So deep dive in a day 3, which is the purchasing and the sales. Towards the end, which is our last sessions, where we will talk about the more towards technical artifacts, such as the table relationship or such as your data entities. A lot of classes I have seen technical folks, they try to understand if I try to post a journal, what type of classes that I need to use. If I want to pass a subledger entries, then what should be the classes that I need to. So we will deep dive more on session 4. In terms of today's agenda, start with accounting terminology for Dynamics 365 Finance, the accounting concepts and to be implemented in the Dynamics 365 Finance. As I mentioned in the beginning, it's a very vast topic. 60 minutes we'll try to cover as much as we can, and in the last 20 minutes or so we'll try to give you more focus on the hands-on. What are the aspects that we need to take into consideration once we understood the accounting principles. So as far as this particular session, we are going to talk about certain principles related to accounting and terminology specific to the Dynamics 365 Finance. As I mentioned earlier, towards the end, kind of showing demonstrations how accounting module, look like in Dynamics 365 Finance. However, this slide makes you familiar with accounting concepts and why we are using the great ERP solutions such as Dynamics 365 Finance. Just to give a quick background, earlier this product has been named as a Dynamics 365 Operations for Operations, then it's been changed to Finance and Operation, and now from a licensing perspective, it is being called as Dynamics 365 Finance. So during the sessions, probably I'll try to use this acronym frequently, sometimes finance and operations, sometimes finance, but the sessions is more focused on the finance and the concepts of finance. So if you consider any type of business that you are working, or perhaps you have your own company today, the accounting principles, as you can see in this slide, consist of different steps to be aware of. First, you need to identify the type of payment and that you are going to receive, or perhaps you will pay to your suppliers, by the time you are doing the business. And therefore, certain economic events against those transactions needs to be recorded in the system. But first, you need to organize them, then you need to classify them and summarize them correctly. So therefore, systems such as Dynamics 365 Finance as a complete ERP solution, which includes all the aspects of financials across all the industries, gives the capability to record all sort of financial transactions to the database, and then later on you can go ahead and extract the data to perform some analysis against it by using any sort of reporting aspects. And you can also leverage a financial reporting tool to prepare some financial reports, probably it would require for government authorities such as bank, tax, or perhaps other companies, those who are willing to or maybe interested to buy your business, right? So in those sort of scenario, you can certainly use a financial statement. Therefore, the reporting capability as are required, such as income statement, balance sheet, trial balance, which I'm getting into it throughout the sessions. And of course, as I mentioned earlier, at the end, you will see a demo on how we are going to configure the accounts, chart of accounts, main accounts, so on and so forth. So accounting principles are, required in order to identify your money from where it is coming and where it goes. As simple as that, right? So basically, you cannot get this information without recording any sort of information into system and prepare some reporting which provides some evidence and provide, the analysis. As you can see in this slide, certain questions are going to be asked while people are working with accounting, regardless of type of business, whether you are in manufacturing goods or maybe retail, healthcare industry, or for that matter, providing any services to your end customer, right? So regardless of what type of business, certain questions will be asked by the internal parties or external parties. So when I'm trying to refer to the internal party here, means employees, and the external party could be your vendors or maybe your shareholders, right? So let us understand one by one. So number one is, do you have enough cash or a fund to pay for the bills? So how would you figure that out? I mean, if you don't have a fund, how are you going to pay how you're going to pay to your vendors or suppliers, right? And obviously, if you don't have any recording of a transaction into the system, you won't be able to answer them correctly, right? Now also, how much money we are expecting from our customers. That is what you are going to get the revenue out of it, right? Or how much money we need to pay to our customers. And therefore, there is a need of a cash flow mechanism which allows to answer these questions correctly. So how much money coming in and how much money is going out is nothing but a cash flow. I think just to elaborate more on that aspect of that term of cash flow. And this Dynamics 365 Finance does allow you to show this inflow and outflow of money with detailed analysis. The other question could be, what is the total cost of the services or products? How much would it cost to me in order to maintain the products or services, whatever the business that I'm in? And think about a scenario where you are in the business of providing education services to the customer, and you hired an external trainer to provide the training. And in another scenario where you are owning a manufacturing plant and producing finished goods, but to produce the finished goods, you would probably need some raw material or maintain some inventory at your end, or maybe you would raise a purchase order, right? Because you need a raw material to be purchased from your suppliers, and then those purchase of raw material could be through a cash or maybe any other mode of payment. So that is where the question comes in: how you're going to manage the inventory or assets. It means you need to calculate how much is the total cost and how much is the profit after you sell your finished good, isn't it so? So if I talk about more on this inventory concept, inventory costing concept, though it is not part of our today's session, maybe in future we'll try to deep dive more on the separate dedicated session on supply chain management aspect of Dynamics 365. But the product does allow you end-to-end traceability of those transactions as well. The other question could be, how much pay raises can I afford, this year to my employees? Well, that will be based on the performance of employee and the profitability of company. So by dividing each employee to the different positions to a particular job, and allocating them to a specific department and the cost center, you can easily find out exactly what exactly that you're looking for and how much amount of pay raise that you're looking for to maybe you can afford as an organization to the employee. Also find out the popularity of your company or more lucrative way to offer your employees, so that will definitely boost morale of your employee. But the question is, how do you find out this information, right? Without recording the information, any application. Today we are talking about FNO, but there are certain other ERPs which actually talks about the same similar concept of finance. So product does allow, Dynamics 365 Finance does allow to record the some of the capability of human resource. So there is a dedicated apps. Earlier it was part of finance and operation, but now it has been separate app called as Dynamics 365 Human Resource, which does allow to record all the information which I just talked about a couple of minutes back, so that you can get the end-to-end traceability of that information. And the final question would be, what product line is more, the profitable as far as the internal questions are concerned. And without recording of all the good informations, or for example your cost and the profitability of the goods, you will not be able to find out exactly the which item sold most and which item should advertise more in terms of in terms of focus more on the future aspect of your business. So therefore, the Dynamics 365 Finance does allow you to run financial reporting, where you can dynamically find the profitability of each and every activity which you're going to record in the system, and so that you can identify which product is more profitable, right? Coming back to the external parties, where I often seen that while doing the implementation, the external parties such as shareholders or a tax authorities or a bank, they often ask this sort of questions that these organizations, what about their earnings, or maybe quarter on quarter or year on year, because these are the people who are going to give you a loan, such as a bank, and definitely they will ask these sort of questions just to validate the score of your earning. And perhaps maybe another example could be you took a loan from a bank for your company, or if you are dealing with the government sector, in those sort of aspect, this question definitely asked by the external parties. And this is just to validate whether you are your company is in on a healthy path or maybe not. Another question would be how company is progressing in a global market, as there is a comparison or there is a competitive market, right? Well, this is in order to deal with the company net worth and the size of the business in comparison with your competitors. Basically, the context here: do you have enough cash flow in order to pay a loan company took against the investment, and or maybe that investment could be a large or could be a small, or is it really worth to make an investment? So basically, just to make sure that that company or that particular organization is having a the promising future for the investment or not. So all of this information is not possible without recording each and every economy events, or for that matter activities into the Dynamics 365 Finance, and then analyze further. Now, if you look at this slide, it indicates the basic accounting equations. Is like would be what are those types of accounts. Today we are going to talk about asset, liabilities, and owner's equity. So the formula is very simple: asset equal to liability plus the owner's equity. When it comes to this equation, the equations remain the same whether it is a sole proprietorship or whether it's a corporation. And as name indicates, if you look at the assets, so asset is it means what it owns. Liability means what it owes to the others, and the owner's equity is basically a difference between the assets and the liability. So first of all, let's try to deep dive more on the assets. So concept of assets is a resource that owned or controlled by a company, and will provide a benefit in current or future period for the business. In simple words, it is something that company owns or controls and can use to generate a profit today or maybe in future. If I talk about examples, so asset would be a current asset and a fixed assets. Current asset would be a cash or maybe equivalent to cash, and fixed assets would be your buildings and the vehicles. And of course, there is no thought about it, or there is no second thought about it, where the asset is a good thing. It gives a value to the business, but yet not necessarily it is completely paid off. So therefore, company might have loan against it. So we call as a liability. And liability is something that you need to pay in order to maintain the asset. And the best example would be, say for example, if you purchase a house and took a loan against it, therefore the asset is a house and liability is a loan, and of course whether has been paid off half of the loan, so that becomes owner's equity. So when end of the year comes in, you probably would need to file your taxes, or maybe you need to find other informations which can depict the view of end-to-end transaction of your organizations to be appeared into the balance sheet. So how much assets or how much liability do you have? So these are the few building blocks when it comes to accounting principles. We'll go one by one. The first one is assets. As I mentioned earlier, the asset is nothing but a company owns and controls and can be used for generate a profit today or maybe in future. And as I mentioned earlier, the one of the scenario could be maybe a new organization comes in and then try to buy your own company. Technically, they are buying assets, And on top of that, they also validate the liability as part of the mergers and the acquisition scenarios. Liabilities in accounting, we call both asset and liability as a one type, and we call it as a balance account. I think Bharat will help us to understand how we can set up those balance account in the concept of main account and the chart of account in Dynamics 365 Finance. So in a simple word, if it is a completely a liability, then we call it as a liability, and if it is a completely asset, then we call it as an asset. But if it is a both, then we call it as an advance. We will see some of a couple of scenarios that I have listed and Bharat also captured in his hands-on experience. When it comes to owner's equity, obviously the difference between how much is remaining of your liability against value of your asset would be owner's equity. So the subdivision of owner equity, as I mentioned in the slide, is nothing but your investments, revenues, expenses, or for that matter, capitals. So if I just go and try to drill down further on the aspect of investment, so investment as it stands, right? It's an investment where basically it's assets put into the business by the owners, right? And these investments in the business increase the owner's equity. Think about a scenario where a large corporation, they are investing a lot of money on a research of one particular aspect of technology or on a new product perhaps. Therefore, investment is not considered as a cost in accounting principles, and it considered as an investment. Perhaps investment becomes an asset, and you can capitalize on cost of the investment. Next one is revenue. So there are also other topics of receiving a money, and we call that other topic is a revenue. That gross increases in owner's equity and resulting based on the business activities done by the respective organization or a company. In a simple term, revenue literally results from selling something, or perhaps renting your property or lending of money and making some interest out of it, right? So anything that increases your equity would be your revenue. For example, in a bank, you have an account, bank account, and you have a money is your assets, that is your current asset, such as cash. Having more revenues result in an increase in assets is definitely a good healthy balance sheet for the organizations. Now the next subdivision of owner's equity is expense. So expense is, as it indicates, right, it's something which we cannot avoid if you're running our own business, and running a business requires some sort of expenses to be paid for, such as the rent, utility bills, or maybe any sort of other expenses. So decrease in the equity of ownership, therefore the cost of an asset consumed by a service and used by somebody else, such as suppliers. That's also one of the example. Or perhaps you are buying something from somebody, that would be an expense, and further expenses could be break into a logical. So we will see in a detail in a subsequent slide. You can classify expenses, multiple multiple chart of accounts, such as expenses for buying goods or expenses for buying some sort of other aspects of your organization. Now let us talk about more, and you might have heard this term called debit and credit, and the concept of T accounting. That is what we are trying to talk about in this slide. So the concept of T accounting is a wider topic, which we'll see in a subsequent slide. And there is a concept of debit and credit as well, which we are going to discuss soon. So usually in accounting, the debit stands on the left hand side and credit stands on the right hand side. And if you look at what is this T accounting, so T stands for title of accounts, which actually act of entering an amount on the left side of the account is called as debiting the account. Again, I'm trying to repeat, the act of entering of an amount on your left hand side of an account is called as debiting account, and making an entry on the right side is crediting the account. And obviously when you are dealing with debiting amount, you are exceeding the amount and which account has a debit balance, and when reverse it, when if there is a need to reverse that balance, then or that account, then that amount has shown as a credit balance. So in order to understand the basic of T account, as you can see here in this slide, the left side is always a debit and right side is always a credit. And the title of account will tell you what that account is, such as your asset account or liability or expense, or for that matter revenue. And you can create as many as ledger account in the system in order to record the economic event. As I mentioned in the previous slide deck, you can literally drill down your lot of expenses in your different buckets. You can create a different dedicated chart of accounts for each and every your expenses, so that you can keep a track of each and every monetary value which is going to be recorded against that particular chart of account. So if I want to give one example, if your company is dealing with multiple expenses such as rent or travel expenses, for the matter car wash expenses, then you can have a dedicated ledger accounts in your system. If you look at the alignment of this part, which actually resembles the letter T, which is a title, and then left side and a credit side, and therefore it is called as a T accounting in general accounting term. I'm sure some of you might have financial background or experience. What we are trying to do here is map those experiences with Dynamics 365 finance terminology. And if you do not have finance experience earlier, then it's a great opportunity to learn and how it works in Dynamics 365 finance. Moving on towards the next slide. So this basically talks about the double entry system, which is equals debits and the credits are made in the accounts for each transactions, and therefore total debits will always equal the total credit, and account equations will always stay in balance, which is asset equal to liability plus equity. Similarly, if you perform any activity through journals in Dynamics 365, and if you have incorrect amount entered for one of the balance, and if that trying to post, it will throw an error message of voucher imbalance, because Dynamics 365 Finance is a double entry system, and I think majority of business are using the double entry system to record the transactions of their business. Now let us understand the concept of normal balance of asset and a liability and how it looks like. So anytime you do a debit, increase the debit and you decrease the credit for asset, and for liability it is exactly the other way around, as you can see here in this slide deck. In a simple term, increasing the credit when you have a liability, it means you have to pay somebody else. And in Dynamics 365, I think Bharat will help us to understand when we'll talk about more in the hands-on experience. The credit amount in Dynamics 365 indicates as a negative signs, so that you can, if you see the negative sign, it means the credit balance, and the debit amount indicates as a positive signs in Dynamics 365 Finance. Now let us quickly move on to next slide and understand this equation more in detail. So as you can see here, I borrow this picture from one of the accounting side just to make you familiar with how these assets, liabilities, and owner's equity and the other subdivisions of owner equity accounts look like, and how it happens to when it comes to debiting the assets and crediting the assets, how it is going to be increased or how it is going to be decreased, which we already talked about in my previous slide. We just talked about the expanded basic equations and the debit credit effects. Now we'll talk about more how we are going to record the each and every transaction in Dynamics 365 Finance. So as you can see here in the slide deck, these are the 3 steps that accountant is to follow. First, analyze the transactions. Second, enter the transaction in journal. And third, transfer journal information to the ledger. So as you can see here, I just tried to add infographic for a ledger. So in a typical keeping world where there is no accounting software available, the accountant is currently, if at all, if in today's world, the way it is moving to a digital transformation, but still there are a couple of organizations still they are using and maintaining the bookkeeping of all these activities into a ledger. So back in days of 10 years ago, this or 20 years ago, this ledger is nothing but was supposed to be a book where the debit and credit sections, which indicates the balances of each and every account, and accountant is to write each and every information. Exactly the same concept has been recorded into any sort of accounting software, especially in F&O, Dynamics 365 Finance. So this ledger is basically nothing but an entire group of accounts maintained by the accounts. In a simple term, whatever the chart of accounts that we do have, and we have a posted accounting entry against it and refer to the collectively as balance. So that is what nothing but a ledgers. A general ledger contains all assets, liabilities, and owners' equity. So those who are not part of Dynamics 365 earlier background, probably they would not understand. I think Bharat will help us to understand. There is a dedicated module in Dynamics 365 Finance, which you will see a general ledger, and you will see all this capability, which I'm just trying to highlight in this slide deck. You will see all everything is captured in the accounting software. I do have still 10 minutes to couple of 2-3 slides. I hope I'm not making you bored, but I think around next 10 or 15 minutes or so, I will request Bharat to focus more on the use cases and how those use cases are recording in Dynamics 365 Finance. But before that, I would like to just quickly touch base 3 transactions which I'm just trying to walk you through on the presentation deck. I do understand those who are not familiar with finance background, it probably would be a more difficult for them to digest, but I'll try to simplify as much as I can. So look at one example. Let us assume that there is an organization, as a sole proprietorship organization called as accounting software. In a simple short acronym is ASC. On December 1st of 2021, ASC, I mean, the person who actually founded that organization, Mr. J, invest his own personal funds of $10,000 to start the business of company called accounting software, that is ASC. The effect of these transactions on ASC accounting equation is like this, as you can see here. And if you just remember the previous slide, the formula or the equation remain the same: asset equal to liabilities plus owner's equity. So as you can see here, ASC assets increased by the $10,000. Therefore, you can see the plus $10,000 underneath of the assets. If I just highlight here, and so does the assets. So the company, that is accounting software company's owners equity also increases plus $10,000. As a result of accounting equations will be in a balance, as you can see here. Okay. However, if you look at the transaction is being recorded into the respective accounts, which is a cash and the owners, the accounting entry that has been, then the transaction date is December 1st, 2021. The cash account is going to be debit $10,000, and the Mr. J capital account is going to be credit 10,000 as part of this whole effect of particular transactions, right? So you can interpret this amount in accounting equation is accounting software that is asset of $10,000, and the source of those assets was the owner, that is Mr. J. And alternatively, you can view the accounting equations. I mean, the software, the accounting software, the ASC organization has an asset of 10,000, and therefore no claims and no creditors. So there is no liabilities because the Mr. J has invested his own funds to form this new organization called accounting software. Now let us deep dive more on transaction 2. So transaction 2 is basically indicates Sir J withdraws $100 of cash from the business for his personal use, because it is his own sole proprietorship type of organization, right? And the effect of these transactions in the company book, which is ASC, account software company book, it look like this, where the asset is going to be decreased. That's the reason the minus $100. There is no liability yet, and therefore the owner's equity is also going to be reduced as minus $100. So if you look at the ledger account effects, as I highlighted here, which is the drawings, basically that particular Mr. J account is going to be debit as 100 and cash is going to be credit as 100. So that owner equity is now balanced. If you move on to a summary of this, which is again the slide number, the transaction number 1 and transaction number 2. If you look at the summary here, which what it indicates, as I just try to simplify, the total indicates the organization has an asset of $9,900, and the source of those assets is the owners of the company. And you can also conclude that the company has asset of resources of $9,900, and only the claim against those resources is the owner's claim. There is no other liability as such. Now let us move on to another scenario, which is transaction number 3, which is more complex than the earlier 2 transactions. And what it indicates, on December 3, the accounting software, which is the company, the sole proprietorship Mr. J has opened, spent $5,000 of a cash to purchase the computer equipment for use in the business, because definitely if you want to run a business, you need some computers, desktop or laptops, right? So he has purchased the dollar of 5,000, and the title of this transactions on the accounting equation is like this. As you can see here, the asset of plus $5,000 and minus $5,000, and there is no effect in the owner's equity. If you look at the transaction, how it is going to be recorded in the system, there will be equipment or your computer equipment account is going to be debit as a 5,000, and the cash is going to be credited with a $5,000. Now let us see more in detail and just try to combine all the three transactions together, and see how the overall balance sheet and overall transaction look like from a Mr. J sole proprietor company called ASC, right? So total tell us that the company has assets of $9,900, and the source of those assets is the owners of the company. It also tells us that the company has asset of $9,900, and the company claims against those asset is the owner's claim only. So there is no liability as such in this three types of scenario. So with that, I'll take a pause here and I will pass a mic to Bharat. Bharat will help us to understand and walk us through 5 use cases. He will first help us to understand use case by use case. Then he will deep dive more into a chart of account in terms of what level of setup that probably you need to do that from a chart of account perspective, considering the topic today. And he will create a ledger, he will create a journal, and he will help us to understand whatever we have seen in the previous slide, where the concept of, as you can remember the slide, the concept of ledger, which is nothing but a voucher in the context of FNO. He will first analyze the transaction, and then he will enter the transaction through a journal in the Dynamic 365 Finance. Over to you, Bharat.
Thanks, Rakesh. Hello, everyone. Good morning, good afternoon, and good evening, based on your time zone. So, let me introduce myself first. So, I'm Bharat Malviya, and I'm based out of Sydney, working as senior solution architect here in KPMG. And I'm part of this community since last 1 year, and I've I've been speaker for a couple of events. So it's great that I'm in front of you. Okay, let's deep dive. Let me present my screen. Hope you are able to see my screen. Can someone confirm? Yeah, cool. Okay, so first let me deep dive into ledgers. So as my friend Rakesh stated that earlier we used to maintain the books, and now in T360 or in the digital world, those books are nothing but the main accounts and the ledger accounts in the system. So how those are configured and what are the main components that we need to consider for those ledger accounts. So all the configurations are available in a module named general ledger. So in the general ledger, we do have various sections. Those sections allow us to recording the transactions, various setups. So I'm not going into the major setups. I'm just going through the chart of accounts. What are the chart of account and what are the main account? So the chart of accounts are index of account in the general ledger that identifies how the account linked to the financial report. So as Rakesh mentioned that all the transaction recording are done for the reporting purpose, so that any organization or any individual can identify that how much they owe, how much they own. So based on the transaction and those financial reporting, this information can be easily derived. So this chart of accounts can be set up here. So each chart of account will be set up with the legal entity or the organization for which they are going to do the reporting. So here I am presenting you the chart of account shared. And the chart of account is a combination of all the main accounts. And what are the main accounts? When we are recording the transactions, so it will have the main account or the ledger account against which we will record the transaction. So the main attribute of the main account or the ledger accounts are account number that we follows. What is the purpose of this account? What is the type and categorization of the account? why we use the categorization, though it is not mandatory, but it is used for the reporting purpose. So let me deep dive into the main account, that what are the main component of the main account. So each organization follows the specific sequencing of the main account number. Those sequences are based on their rules that they are setting up in the organization. So here we can see that we are using the Contoso company USMF, and all the bank accounts are started with 110 series. So we can see that there are a couple of fields, main account, where we will specify the account number, what is the purpose of the account or the name of the account, and the important field which Rakesh was talking, and that derives the main building block of financials. This is the account type. For what purpose this account type will be used. So here we can see that whether the account will be considered as asset, liability, revenue, or whether it will be expense account. So based on that, we can define that, okay, what are the purpose for this account and how this account will be used in our financial books for end-to-end reporting. And the next field is category. So the category is also used in the main financial reporting. So when we are doing the financial reporting, we can group multiple main accounts by the category and easily perform the reporting. So I'll not go much more details in the main account. I'll go to the recording of transaction. Okay. So as Rakesh mentioned that each and every transaction will be recorded in T365 or in any organization's accounting system. So in T365, there are a couple of ways to recording the transaction. So here we are looking with the journals. So first, what is the journal? So the journal is an accounting tool that allows posting of various financial transactions. These transactions take place when a specific financial event is happening for a specific reason. We can create the journal in the general ledger module and the section called general journals. The journals are also allows us to edit and review the transaction before it is finalizing or posting it to the ledger books. So here I'm going to present some of the scenarios which are very real world scenarios. There are 5 scenarios that I'm going to show. Okay, so ASC is the sole proprietor of provisional store. We are considering one scenario where any specific person or organization has a provisional store and they are recording the transaction. So how those transactions will be recorded? So the first transaction which is executed in the month of April is purchased good from Lipton and Company on credit. So what are the main attributes of this particular transaction? The first is date, because as Rakesh mentioned that each transaction which are recorded in any accounting system will have certain attribute, and those attributes identifies us or helps us to identify that what is the purpose of transaction, how it is recorded, and what are the origin and purpose. So first is date, next is description, that what is the purpose of the transaction, how it will be taken place, and for which amount it will be transact. So here we can see that an organization purchased a good from specific vendor. So when they are purchasing any goods, they are making an expenses. And as Rakesh mentioned that all expenses will be debited and we will increase the liability on the organization. So the liability will be credited. So we'll create the transaction here. So I'm going to create a new journal here. The journals are again the categorization of the transaction in T365. So I'm going to use one journal, create lines. Okay. So when we are creating the journal, First, I would like to add here that Dynamics 365 follows the double entry bookkeeping system. That means each entry will have respective debit and credit entity or the ledgers. So here we can see that we are creating the expense and creating the liability. So the expense will be debited. So I'll just use this account as an expense account. Take a copy from here. I'll debit. And what will be my credit? Since it is a liability, I will use the liability account and define in the offset. So this transaction is created. So yeah, 10,000 transaction. Okay, we can define the description that what are the goods purchased. So here we can see what are the attributes that we have. We define the date. We define what are the ledgers that are going to impact with the transaction. That means what will be the debit and what will be the credit. So this transaction is complete for us. And one more thing that we are defining the currency. We are D365 supports multi currency, and we are posting this transaction. So as soon as we post this transaction, it will create the voucher. So vouchers are nothing but the final posted transaction, and that will reflect in the accounting books. Yep, the transaction is posted, and we can see the what are the entries posted in the system. Yeah. So it shows that what are the accounts that we have used and the amount that we posted. I would like to add one more point here that though it's 10,000 in the both records, but one is showing in the right hand side, one is showing in the left hand side. So all the credit will show in the right hand side, all the debit will show in the left hand side, though it is a single column. And especially for the technical folks, this amount in the credit side will be always represented as a negative in the system or backend tables. So it is a very important aspect because when I started my journey with the D365 or the Dynamics AX, I was a bit confused that why it is happening, and it took me a lot of time to identify. So any customization will be need to consider this aspect. Okay, now I'm moving to next transaction or the next use case. Here we can see that the transaction is sold goods to Joy and received cash. So we are selling the goods. That means we are increasing the revenue, and we are increasing the assets as well. So as Rakesh mentioned that all the revenue, this is the final transaction that I'm going to record here. So the asset will be debited and the revenue will be credited. I'm going to create the transaction with a I'd like to add one more point that once the transactions are posted, those cannot be reversed or removed. Not reversed. It better term is removed. So those will be committed in the books. So any removal of the transaction cannot be done. Instead, we have to post the reversal entry for that to make the corrections. Okay. So the date is 5th of April, and since we are receiving the cash, so we will debit the petty cash account, credit the revenue account. Okay, so the transaction is created and we are going to post it. There are other aspects with respect to the transaction, which I'm not referring in this particular session because those will be more discussed in the following sessions by our colleague Anil. So those aspects are what are the financial dimensions and other administrative activities in the finance. Okay, so the transaction is created and the voucher is generated for it. So the voucher is the final committed transaction in the books. Here also we can see that the voucher is posted. Similarly, I will go with the next transaction. So here they paid the salary by cash. Again, we are paying the salaries. That means it is a kind of a expense for organization. So the expense will go in the debit and uh, capital will go in the credit because cash will be considered as capital. So now what I'm going to do that creating the all the transactions for those use cases in the single journal for uh, better management of time. The transaction is we are going to pay the salary. So how it will be reflected in system or the accounting books. So the salary account will be debited. And debit 5,000. Credit petty cash account which will be 110,180. One more observation that you might have observed that I'm specifying the amount only in the debit side and not in the credit. But when the transaction is posted, it has amount in both debit as well as credit. How it is happening? It is happening because the account in which we are specifying in the left hand side, whatever whatever account should be debited, so we will specify in the account section and whether it's a debit or credit this particular account. If it is a debit, then we will specify the amount in the debit side. If it is a credit, then we will specify the amount in the credit side. And system will create the another entry for the offset account. Offset account is the secondary account or the other impacted account in the double entry system. So the impact will be taken care by system. Okay, so the salary paid on 6th, I believe so. Similarly, another one. Here in the use case one, we seen that we have bought or the organization has bought the goods or services from particular vendor, and they are now going to pay. So when they are paying by check, that means the check will always go through the bank account. So the bank account will be impacted here, and since in the initial transaction, in the transaction reference, we can see that we have created the liability on the organization that we owe something for specific vendors. So we are going to remove that liability. So for that purpose, the bank, which is the capital account, that will be credited and the uh, asset will be debited. So I'm going to create this. It's on the 7th. Sorry. 10,000 and the bank account which will be which we have used. We can select it. It will be created. The next scenario is the insurance is paid. The bank paid the insurance premium for the furniture as per standing instructions. So we are paying through bank, and since it is an expense for us, we are paying the insurance expenses. So expense will be credited, sorry, debited, and the bank account, which is capital account, will be credited. So I'm going to create the transaction. It's on the 10th. See the expense account and the amount is 300. Bank account. I would like to add one more information here that if you observe the voucher number will be generated by system, and those will be confirmed once the posting is done. Otherwise, the voucher will be remain in the draft state. So, post the transaction. There are 3 vouchers posted in total because we have recorded 3 transactions, and each transaction will have specific voucher information that we can see from either here or we can get it from the reports. This is all I have for today's session, and in the following session we are more deep dive into the various aspects of accounting setup, administration in the finance in D365. That's it from my side.
Yeah, thank you, Bharat. I think we'll. I think we are on time. We'll wait for 2-3 minutes if anyone has any question. I can see only one question from Maharaja. He did mention that we can add accounting for manufacturing, including cost sheet scenarios. So Maharaja definitely will add in subsequent sessions. Not necessarily maybe next session, but a session after that. Definitely, that is first week of May. We definitely will add that. And if you have any, as I mentioned in the chat, Maharaja, if you have any specific scenario that you would like to explore more on, understand more in terms of the implementation, very specific to the accounting for manufacturing, please share with us, and we will try to include that as well. Yeah, sure, Rafi. You will get a recording and the PPT as well, both. At this stage, as we speak, we do have a YouTube channel. Maybe you can subscribe that YouTube channel, and I will share that post on my LinkedIn page, either on my personal LinkedIn page or the community LinkedIn page, and you can follow from there onwards. Okay, I think I can see one question from Basav. Can we have a basic session on the accounting setup? Maybe Basav, in the next session, as I mentioned in the chat, there are 2 sessions that line up. Next week, we are going to more focus on finance administration part, which we will try to understand the configuration and the core aspect of chart of accounts or other main accounts, financial dimensions, accounting structures, bank account, GL and all. So I think in that session, we will cover that aspect, Baso, for sure, the required setup for accounting to be up and running in FNO. I can see one more question from D365 support admin. I can't find the name. The question is from where we can see all the transaction reports. If you can just elaborate more, are you referring to financial report tool? Are you referring to any specific report which is a trial balance, or maybe are you referring to electronic report which provides the capability as we speak? If you can just elaborate more, that will be help me to understand correctly. Yes, so I think the trial balance it is part of the product capability only. You know, no need to go back and search for any reports. That aspect we will cover in next session, which is which is Learn Finance Administration. Whatever the journals that Bharat has posted today, we will see how these accounts starting from 6020 and 60 again, how these accounts are reflecting into a trial balance. So whatever the Excel sheet, maybe Bharat, if you can just share the Excel sheet and the list of accounts that he has used for the presentation and demo today, we will see only those accounts, Rafi. You will find those accounts in a trial balance, and I think in that process, which is in next week session, we will try to also help you to understand where to go and see the trial balance. Does that make sense to you, support admin? I sorry, I didn't know your name, so hence I'm just going with the name which is registered while logging into Teams. I think if there are no further questions, I think we'll take a pause here and we'll have a next session. I think I already pasted the agenda for next 2 week sessions. That is the next week session based on the core understanding of Learn Finance Administration. Week after that, we will have purchasing, sales, and distributions, which is nothing but in accounting principle is the sub ledger. So that we will try to see in session number 3. Okay, thank you very much, all. Thanks a lot. Thanks, Bharat.
Thank you. Thank you all.